Good afternoon. This is Jake, also known as The Real Day by Day on Twitter. I'm coming to you with a macro update again, as I currently want to track how things have changed or morphed in the data on the macro. And I'm going to show you a few instances in history where I find the geometric shapes in the volume signature to be fairly similar as today. And it's important to obviously let you know that these are macros, and these vertical lines signify the areas that I do find similar. Now, if you were to look at how these all resolve, you can see in this case it resolves with some retest down pressure followed by an up wave, which is the 2003 case. You can see that this 2012 case resolves a little bit up, then down, and then followed by a massive long up wave. And did I have any other ones here? I thought I did, but I may not. Oh, yes, I did. I had this other one right here in 2009 where I didn't draw the vertical line on top, but you could see it matches up right around there, which again, this case had a V bottom of sorts and then had an up wave. So that leads me to actually be bullish in terms of what happens afterwards. What happens after we retest a low? In all those cases in history, the volume signatures say we do move up. And for now, ignore these lines. These are my cycle vertical lines that are very date relevant for what I think would happen, as I've done the analysis prior to doing this video. Now let's go ahead and zoom in to a smaller time frame to see which one of these geometric shapes actually do look most similar to the eye. And if we just hide this right here, we can take a look. So we're basically looking for this moment right here on a weekly time frame, which is this red curve moving up, this gray curve moving up, but you could see that its slope is already starting to bend and curve, and as it does, it will create a more circular shape right at the top, or a rounded shape at the top before it starts to go down. So which of these cases do look more similar, more or less similar? And if we go to a little bit of a larger time frame, it's important to actually study up close what these shapes look like, because the closer we find these shapes on a macro, the more the price in history will form a similar trend. So again, if we look at this with our eyes right here and start to scroll to the left, we've got a case like this, which looks like it's similar in terms of its morph. We've got a case like this, which again, the red is curving up, the gray has already started its ascent. In this case, it's a little bit of a different pattern, but in terms of the way that it's heading, looks similar. However, I'm going to go ahead and remove this case because the case to the right looked more similar than this, and we're kind of going through a process of elimination area. And that's my reasoning for that logic. In this case, again, that shape is being formed right here in this moment. You can see how similar it is to 2003, which was my original thought. So that really leaves us with these two similar moments. Again, on the 9-day, what's interesting is that this 2012 moment actually looks more similar than that 2003 moment. And I say that because of the actual vertical size, or the dimensions vertically, from this point to this point, from peak to bottom right here, is fairly similar in dimension to this point and this point, versus this one has a more stretched version where the dimension vertically, you can see, is much longer in amplitude. And that makes a difference to me. It does. It doesn't necessarily mean that 2012 is more correct, but I do have to kind of lean that way looking at that data. And what really starts to matter is the smaller we find that amplitude in history and what it's doing at the moment. So this is a 3-day chart. We cannot get that deep into 2003 on that 3-day chart, but here it is on a 4-day chart. So again, the 4-day, we see that red slope moving up into a curving down gray slope right here. It looks pretty darn similar right here. It looks fairly similar over here, which ultimately made me choose this 2012 fractal here in terms of trying to decide how the micro will play into the macro. So what you could see that I've done here is that if I were to draw a timeline right there leading into that dip and move that timeline from the vertical line into this area, I've tried to remain consistent with that upward timeline before deciding that we're going to move down as this wave does here. I also have to do a little bit of artistic interpretation in terms of the size of this fractal being much more contracted than the size of this fractal, which creates a greater amplitude of volatility. Generally, that artistic interpretation starts to allow me to focus on symmetry more than a time cycle at this point in time, because I do believe that the time cycle I've pinpointed is fairly accurate. Now, at this point, we can introduce my momentum indicator again and start to look and see what it's hinting at. So we could see that the momentum indicator is dropping here. That's very important to understand because it does lean towards a topping pattern right here. See the momentum of the 5 and 9 MA with major support in these areas will not allow it to drop that quickly immediately. However, it's hinting down, and that allows me to look for this down circle of support right here towards this bottom area. If I go to a 6-day, it's still embedded. Greeny is, but my momentum is already pushing down. If I go to a 7-day, also pushing down but embedded right here. Even the 8-day is starting to hint down. Now the 8-day is a very interesting time frame to me. Why is that? I'll tell you. For one, this is what I see as a Jaws indicator, which ultimately creates a squeeze indicator in terms of once it does catch support, I don't see that support dropping extremely low yet until this entire green curve starts to rise up, this volume curve starts to go down and meet somewhere in the middle for a sort of equilibrium where it would allow a deeper dropping pressure. Once I go down to the 2-day and daily, I already see the sell pressure here forming. On the daily, I see momentum starting to rise right here. Now this momentum indicator is could still very much morph and go back down. It's greeny that I really look to for guidance. If I look at this red curve trend, it's pointing downward, and if you follow the slope, it points right into that circle area. So if you imagine it with your eyes going downward right here, it looks like it would meet right in the area where I have this vertical line somewhere near October 12th. Same deal right here. And this time frame is extremely interesting as well. I have an inverse Jaws, which is bearish right here. And on a 3-day level have the same thing. In other words, what I see here is that we've already got a downward move, but it's a little bit stretched at the moment. And we've got some support coming into right here in this 328 to 333 area, which I think creates a corrective wave up, but I don't feel that that corrective wave up will be a higher high. I do think that it will be a corrective up, and we could see the 5 moving average crossing down into the 9 moving average, pinching downward, already suggesting something a little bit bearish happening in the next month ahead or so. Now, everything else should follow those macro frequencies. So the bottom line is now, let's take a look at all of this more zoomed in. Look at this candle coming in right here. I do think that we get this sort of wedge down right here, which follows with the corrective wave into somewhat like the September 22nd to 25th area. Do recall my last video where I saw major risk in the September 25th zone. At the moment, I thought that that was going to be a higher high, and it appears that at this moment, I'm looking more towards the same risk zone, but I see it to be a lower high. So that's the only thing that I've changed about my view in that particular instance. And I do see a very, very good possibility that somewhere into early October, we're going to catch some kind of good news catalyst that creates a rise all the way up into November. It may even go into Christmas and extend a bit, like somewhere out to here. Sorry, somewhere out about to here. But at the moment, I'm going to keep this in line with what I saw on that macro as far as I took this timeline upward from that larger time frame from the 2012 cycle, and this is where it matched up. It matched up roughly from here to here into late November. And then it follows with, so just to discuss that again, I'm looking up into this area of November, but it's possible that it could go all the way into Christmas, and then I see major risk into approximately February, March. Now, once it hits that February, March zone, I think that's going to be the low. I don't know if this is actually going to be the area where it holds support. It could be a little bit deeper. However, time cycle wise, I'm pretty confident in what I see. And I do feel we get this bullishness in this February area, February-March area creates a great buying opportunity or a discount wave where you can hold much longer all the way into 2022 as the macro suggested on that 9-day time frame. At that point, I detected a lot of risk and possibly even a recession-like wave in 2022. However, there's a lot of time before we get there. There's a reason why I do see that, and I don't see it as much in the math yet, but more in terms of what's going on little by little on the quarterly level in terms of the volume, showing me selling pressure into every rise. And this could take a while to play out. Again, I think that it could play out somewhere in the March of 2022 cycle. We can get a very large splash and possibly go down all the way into this area of the low 200s, maybe even deeper. But again, this is in March of 2022. There's a long way to go into there, and I am sure that I will get data morphs and can get a more accurate edge as we get closer to those days. So again, let's go ahead and zoom in here to take a look at what I think about the micro path. If you are a trader, I do feel that trying to buy this dip right here is a little bit more on the risky side. I'm not as confident about this up wave yet, although I'm leaning towards it. I'm never as confident about micros as I am with macros. You know, sometimes you can just break this down with a bear flag and not get quite this high in a B wave and shoot down lower. This is where I start to become more confident in that first couple of weeks in October, is I see a nice move up into late November, possibly even Christmas if it extends with time. That's what I'm looking for though. So this kind of analysis, by the way, is offered on an intraday basis in my day-by-day algo private Twitter, and that is available for a charge. I do have a very discounted offer for a trial, and it's only $10, and actually for the trial, and actually also includes my AI algo picks. At the moment, these AI algo picks, I am leaning a little bit on the cautious side because they are micro caps, and I see a little bit more weakness in the micro cap sector, and I'd like to get a little bit more confidence. So once we get into this October area, I'm going to probably have a lot more picks in store. But at the moment, if you are day trading, or if you are just looking for general analysis of the S&P 500, my analysis on an intraday basis certainly gives you a great edge for that. That concludes this video, and I really appreciate a thumbs up and subscribing to the video so you can get future free content updates. I hope you enjoyed. This is Jake signing out, also known as The Real Day by Day. Enjoy the rest of your Sunday, everyone. Goodbye.